Hey, I'm Stephen and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So lube up and get comfortable because today we are going deep and it's going to take a while. I'm going to be doing a deep dive into some research from Holon Global Investments that suggests that Tesla is well on its way to becoming a $10+ trillion company and that Tesla stock today, not tomorrow, not in 10 years, today is worth $3,369 per share. Tesla stock closed today at $1,096 per share. That means Tesla stock, by Holon's calculations, is more than $2,200 undervalued right now. In other words, Tesla stock should be 3 times its current price today. Clearly, this research is worth discussing. Now, there is one controversial assumption in this research, but the truth is, the more that I look into it and the reasoning behind it, the more I get on board. So, with that said, let's get into the video. If you love crypto, stocks, and free stuff, or just want to help out the channel, check out these great offers. BlockFi are launching the world's first Bitcoin rewards credit card. People in the US can earn 1.5% Bitcoin back on every purchase with no annual fee using the BlockFi Bitcoin rewards credit card. Check out the link in the description. And for a limited time, you can get up to $250 in crypto bonuses when funding a new account on BlockFi, where you can use cryptocurrency to earn interest, borrow cash, and buy or sell crypto. If you want your free crypto, use the link in the description. And if you'd like up to 2 free stocks, check out the link in the description to WeBull. If you open a new account, you'll get 1 free stock valued up to $300 just for opening an account. And if you make an initial deposit of $5 or more, you'll get a second free stock valued up to $2,000. Seriously. Free stocks? Yes, please. And finally, if you're in Australia, the UK, or New Zealand, you can get a free stock with stake, also linked in the description. Thanks so much for your support, guys. Let's get back to it. So let's have a look at Holon's research report. I'll share my thoughts and commentary along the way. And by the way, as always, there is a link in the description if you want to read through the entire report. You don't need to sign up for this. There's no direct download link that I'm aware of. But unless you're an absolute moron, you'll be able to figure it out. Tesla. On the Road to a $10 trillion Company and Beyond by Tim Davies. I thought it was worth reading just a few of the sections from the executive summary here. I think they're a great overview of why Tesla is absolutely slaying and their future dominance. Regulation in developing countries to drive annual EV sales to 206 million by 2050. I told you guys there was a controversial assumption in this report. Tesla's first mover advantage over competitors will allow it to capture 25% of EV sales in the next decade. Tesla's major manufacturing advantage over traditional ICE and new EV brands delivers higher profit margins and massive cash reserves to underpin ongoing innovation. A fully integrated energy production and storage solution gives Tesla an edge on its competitors. Tesla's lower lithium battery costs to slash EV operating expense. And Tesla's main competitors are drowning in debt. While it remains one of the most shorted stocks today, the bell curve is real. Tesla's share price has defied the critics and buried short sellers, delivering a 720% return in 2020. Holon Global Investments believes that at current prices, Tesla's shares have remarkable upside and provide investors with a once-in-a-generation buying opportunity. I just want to take a moment to jump in here. A few things. First of all, I totally agree. I really believe that Tesla is a once-in-a-generation investment opportunity. You guys noticed the name of this channel was Solving the Money Problem from day one, and practically the only thing I've discussed the entire time has been Tesla stock. Now look, I'm not here to spell things out for you, but if you can follow the breadcrumbs, you might be able to figure out what I was getting at with the name of this channel. And if not, well, maybe you'll figure it out one day. This would also be an opportune moment to remind you guys and girls that unless you're among the 3,000 plus people already supporting this channel on Patreon, and by the way, thanks so much to everybody who is supporting the channel, you might gain an insight into just how big of an investment opportunity I personally believe Tesla stock is by signing up to Patreon with the card in the corner or the link in the description to gain exclusive access to my up-to-date Tesla stock price targets all the way out to 2031. And if you still haven't gotten the hint at this point, might I remind you that I am literally all in on Tesla stock as per my latest merch design. Check out the link in the description or the card in the corner to pick up your own. There's shirts, hoodies, phone cases, tough cases for phones, long sleeves, and loads more. I really am doing my utmost to tell the entire fucking interwebs about the opportunity that I see in Tesla. Like Holon, this, in my opinion, is a once-in-a-generation opportunity. Based on Holon's analysis of Tesla's 30-year discounted cash flow forecasts, we value the company today at $3,369 per share. If Tesla can achieve our long-term financial forecasts, Our DCF valuation for Tesla in 2030 increases to $6,244 and further increases to $9,056 in 2040. Regulation and developing countries to drive annual EV sales to 206 million by 2050. We are now getting to the most controversial point and assumption in the entire report. Pay very close attention. This is critical to their valuation. According to our 30-year global demand model, the company will benefit from a doubling of global passenger vehicle sales to 206 million vehicles by the year 2050. We expect governments globally to ban ICE vehicle sales by 2040, and the use of ICE cars will be banned across most of the globe by 2050. Just jumping in here, I personally believe these are very reasonable assumptions. Let me know in the comments if you agree or disagree and why. A key finding of our work is that 75% of global demand for EVs will come from developing markets over the next 30 years. With rising disposable incomes and a 40% increase in developing market populations, this is a very important point, it will allow over 1 billion people to own a vehicle for the first time. 40% of EVs sold over the next 30 years will be in India and China. Now, I recommend if you guys want to take the time, pause the video here, have a quick look. I'm not going to go through every little facet of this chart, but it's worth understanding in detail where Holon are coming from here. The global vehicle market will effectively double on the back of the rising billions. Holon believes Tesla will produce almost 5.5 million vehicles by 2025 and capture over 20% of global passenger vehicle sales over the next 10 years. I always like to contrast these type of projections with my own just to see where I'm at now. This is going to sound very arrogant, but generally speaking, the closer they are to me, the more I think they know what they're talking about. I said it, I believe it. Let's move on. So in my Tesla valuation model, which if you don't already know, you can access exclusively by supporting the channel on Patreon, check out the card in the corner or the link in the description. This is only available to supporters at the investor tier and above. I have Tesla producing well in excess of 5 million electric vehicles in 2025. In other words, Holon and I are actually extremely close to one another with our production estimates for Tesla. Tesla's major manufacturing advantage over traditional ICE and new EV brands delivers higher profit margins and massive cash reserves to underpin ongoing innovation. And a second point I just want to elaborate on here, I continue. Few investors understand the enormous difficulty involved in switching from manufacturing ICE vehicles to EVs. I really want to emphasize this second point here. It just does my fucking head in when people assume, oh yeah, General Motors could just transition to EVs as soon as they want to. They're going to come and crush Tesla. I mean, honestly, I don't know how to say this nicely, but when I hear these kind of comments, I know that I'm hearing from an uninformed moron. At least when it comes to this particular topic. They may be a genius in other areas of their life, but these are some 69 IQ comments around transitioning to EVs. Tesla's lower lithium battery costs to slash EV operating expense. Tesla believes it can lower lithium battery costs by over 50% in the next 3 years. Shout out to Tesla's Battery Investor Day where they unveiled these plans. And the following is a very important point. Tesla's main competitors are drowning in debt. Quick quote here, the leading global ICE automakers currently have over $900 billion of net debt on their balance sheets. Please take a moment to let that sink in. Financial and valuation forecasts. We forecast total vehicle production will reach 34.2 million electric vehicles per year in 2040, with its combined revenue from EV sales, software upgrades, vehicle services, and Tesla's energy division reaching $2 trillion by 2039 and $3 trillion by 2047. Holon also forecast that free cash flow will reach $500 billion per year in 2037, surpassing $1 trillion from 2047 onwards. This enormous accumulation of cash could be used by Tesla to develop new business opportunities beyond its current EV and energy plans. No shit, Sherlock. Holon with some fairly bullish assumptions there. Tesla surpassing $500 billion in free cash flow by 2037 and over $1 trillion by 2047. For contrast, my valuation model for Tesla in the bull case makes these figures look like an absolute joke. But keep in mind, Holon there is assuming software revenues, not including robotaxi. They're also including automotive energy and nothing else. My model actually implementing robotaxi revenue as well as some Tesla bot sales and the ongoing subscription costs for those. The point there is that Holon, in my opinion, are actually very conservative. They're not even considering or including the biggest money printer in Tesla's future, robotaxi revenue. Tesla could also use these funds to pay dividends to its shareholders or initiate substantial share buyback programs. Totally agree here. For those of you who haven't seen my video on Tesla dividends, Long story short, I think at some point in the future, it becomes inevitable Tesla will be forced to pay dividends. Why? Because they simply won't be able to think of any conceivable use of all that money they're printing. Tough problem to have. We have used a discounted cash flow approach on Tesla to reach our current share price valuation of $3,369. Again, I want to underscore that is a current share price, not future. They mean today. If Tesla can achieve our financial forecasts, our DCF valuation increases in 2030 and 2040 to $6,244 per share and $9,056 per share respectively. Just out of interest for a little bit of fun, let's imagine it's 2030 and Tesla stock is in fact worth $6,244 per share. Let me know in the comments below. How much would your Tesla stock be worth in total? Holon's current DCF valuation target of $3,369 illustrates the substantial undervaluation of Tesla, and as a conclusion, we believe that Tesla should be a core holding in every investment portfolio, and I completely agree. You basically need to be a moron not to own Tesla stock. Hey, I'm not going to sugarcoat it. Holon believes that the replacement of ICE vehicles with EVs globally, as well as related investment in renewable energy and infrastructure, EV charging networks, and energy storage solutions, is the largest investment opportunity globally over the next 20 to 30 years. Something to consider. Global EV sales will reach 86.4 million vehicles per year by 2035, with a surge to 206 million EVs in 2049 as we approach our 2050 deadline for the removal of almost all ICE vehicles globally. EV demand is set to explode over the next 2 decades as governments look to address greenhouse gas emissions. Once again, I recommend you guys pause and take a closer look at this to really let it sink in. Looking out over the next 30 years, developing markets will see significantly stronger GDP growth than developed markets, with the rising per capita wealth expected to lift car ownership from 10% to 30% by 2050. As a result, Holon expects the global EV fleet will reach almost 2 billion vehicles in 2050. Now, I just want to take another pause here and ask you guys and girls to play along at home for a moment. Just hypothetically speaking, let's assume that the global EV fleet does actually reach around 2 billion electric vehicles by around 2050. And let's assume that Tesla has around a 25% share of this market, 500 million Tesla vehicles on roads. Now, here's a little bit of homework. Using a calculator, or your brain, whichever you prefer, think about some of the potential hypothetical revenue Tesla might be able to bring in based on how many of these vehicles, 500 million, are also paying a monthly fee to access Tesla's full self-driving software. But before you do that, please make sure you're sitting down and have a change of pants. Let's move on. Tesla will dominate the EV market for the next 30 years. EV owners are sending traditional auto brands a clear message. That is, innovate and build vehicles that rival the emotional connection that Tesla owners experience on driving a Tesla for the first time, or risk bankruptcy in as little as 10 years. Bankruptcy within 10 years. Why does that sound familiar to me? Have you guys heard someone on YouTube talking about this, or am I just imagining things? Holon's global EV model predicts 2 billion EVs by 2050. We can see here in blue Tesla's share of the global EV fleet and the global EV fleet itself, Tesla capturing around a quarter of the fleet. Holon's demand model forecasts that Tesla will sell 5.5 million EVs per year by 2025, 14.85 million vehicles by 2030, and 34.1 million vehicles per year by 2040. Now, in my opinion, and per my Tesla valuation model for those of you who have access, I actually think that Holon are massively underestimating Tesla's EV sales in the year 2030, but time will tell. If Tesla can achieve this milestone, Tesla's global fleet of EVs will surpass 462 million vehicles by 2050. Again, just think about the ongoing recurring software and services revenue. Absolutely insane. Tesla has positioned its EV passenger range across the 3 largest vehicle categories of mid-size passenger vehicles, mid-size SUVs, and small compact passenger cars. In 2019, these 3 vehicle categories captured over 80% of the 75 million global passenger vehicle sales. This is something very important to consider. Once the $25,000 vehicle is released, Tesla will effectively be competing for about 80% of all global vehicle sales. Our model suggests that Tesla's Model Y sales should reach 9.6 million vehicles in 2040 and peak at 11.8 million EVs in 2049 across manufacturing facilities in Greater Asia, Europe, and the US. Holon believes that demand for an entry-level EV will see Model 2, aka the $25,000 Tesla, sales hit 9.8 million vehicles in 2040 and accelerate to 14.5 million in 2049 on demand in China, India and Africa. And I want to quickly take another pause here for a sanity check. I've also thought about total addressable markets for each of Tesla's vehicles. I personally think that a $25,000 Tesla could sell 10 million units per year globally. And I also believe that there's a subsequent generation, another vehicle after the $25,000 model that's going to be about 25% cheaper, around $18,000 for the starting price. Now, if you want to really nitpick, maybe Tesla can just drive the price of the $25,000 Tesla down to $18,000. But in either case, once that price point is around $18,000 US for a new vehicle, I expect this vehicle alone could sell about 15 million units per year. In other words, on this particular point, Holon and I are almost identical in our projections. And for those wondering, no, I didn't just pull these numbers out of my ass. They've been available on my Tesla valuation model exclusively on Patreon for quite some time. Holon believes that the enormous challenge ahead for traditional automakers to shift from ICE vehicles to full EV production will mean that few traditional automakers will survive beyond 2030. And there's that comment again about the majority of legacy automotive manufacturers going bankrupt before the end of the decade. I feel like I've heard that somewhere before, I just can't put my finger on it. Many of the incumbent auto manufacturers have underestimated the rapid shift in consumer sentiment and demand for EVs over the decade. This is a huge understatement. This has resulted in significant underinvestment. In our view, the question is less about whether Tesla can sustain its competitive advantage, but whether the incumbents can survive the transition to EV and the transformation of their business. Absolutely agree. Tesla's in-house manufacturing advantage. Leading auto brands rely heavily on long-term supply partnerships for most of the components in their vehicles. Overdependence on outsourcing and just-in-time ordering to keep working capital low risks consequential production delays, or worse, if problems appear within logistics channels. Tesla recognized the complex supply chain in the automotive industry and revolutionized it through vertical integration across its factory, including battery and electric motor production. Elon Musk's brilliance shines in manufacturing. An example of Tesla's manufacturing innovation is its use of giant mechanical presses that can save substantial manufacturing time by forging single car bodies and individual car panels alongside its near fully automated production with little human handling from beginning to end. Each gain achieved by Tesla engineers has allowed it to reduce the number of production steps to build a passenger car from 130 steps, which is a typical ICE vehicle, to just 40 steps for the Model 3. Can Tesla scale to produce 45 million passenger vehicles per year? Passing on cost savings every year through lower prices will allow Tesla to exert maximum cost pressure on traditional ICE makers trying to compete with Tesla while also under substantial financial stress. And I have to jump in here, highly underrated point here. I mean, I don't know how else to say this. Internal combustion engine vehicle manufacturers are going to be getting f***ed from every direction simultaneously. And I mean, hey, if that's what you're into, fine, but I don't think it's going to end well. Holon believes these conditions will mean few automakers will survive the jump to EVs. Again, totally agree. Maybe somebody should let Mary B.S. Barra know. Tesla has bought extremely large manufacturing sites to build gigafactories in Shanghai and Berlin, suggesting they may eventually look to produce 2 to 2.5 million vehicles per year at each site. This is one of those no shit Sherlock moments. Obviously, Tesla's Gigafactory Berlin, stage 1 alone will produce 500,000 plus vehicles per year. There's 4 stages in total, do the math, 500,000 times 4, 2 plus million vehicles per year. Gigafactory in Austin, even bigger than Berlin. Obviously, there's going to be 2 plus million vehicles per year as well. I personally think ultimately could be 3 plus million. And once again, I have to reference my Tesla valuation model. It's got some notes in there assuming that each Gigafactory over the long term will produce between 2 to 3 million electric vehicles per year. So it turns out, once again, Holon and I on the exact same page. Conclusion on Tesla competitors. They are all unequivocally f***ed. Oh, sorry guys, I misread that. Let's try that again. Tesla has a significant financial and product development advantage over almost all traditional automakers throughout the next decade, allowing it to accelerate production and steal significant market share from existing ICE competitors. Toyota leads in 2019 with its global market share above 10% in ICE vehicle, and we can see Toyota here in orange with a decent slice of the ICE vehicle market today. Interestingly, a large chunk of the global ICE market actually made up by smaller automotive manufacturers, almost half. Tesla's first mover advantage could allow them to capture up to 28% market share over the period from 2021 to 2030. Toyota appears to be the biggest casualty, and I have to jump in here. I've made a bunch of videos on this. Toyota, I totally agree. Once again, Holon and I, exact same page. Of all the legacy automotive manufacturers that are at decent scale today, Toyota are unquestionably the most fucked. By delaying its commitment to EVs until 2025, Toyota's planned production of just... Let's try again. Toyota's planned production of just 1 million fully electric vehicles by 2030 will see its market share plummet to 1.5%, if they're even still in business at the end of the decade. Tesla's dominance in EVs could see global market share above 25% in 2030. I think this is a very realistic assumption. Previously, I was actually expecting over time Tesla would lose significant market share. With each passing year, I've come to believe that Tesla is going to maintain around a 1/4 share of the global EV market, give or take. Could be as much as a third, maybe at worst 20-22%, somewhere around there. While this seems highly unlikely to most investors, to us, the facts are clear. Elon Musk will have the opportunity, the financial resources, and most importantly, the drive to take advantage of a 10-year window that will enable Tesla to completely dominate the EV industry for the next 3 decades. Spot fucking on. Holon have nailed it. In other words, Tesla's lead is truly unassailable. There is no catching up to Tesla now. It's now just a matter of how much will Tesla throw you around the bedroom. I mean, dominate you. Wait, same thing. Let's move on. Few investors understand Elon Musk's simple game plan to dominate in the US and European markets. That is, build large-scale gigafactories in traditional ICE competitors' home markets and force them to choose between providing sufficient EVs to meet the demands of either their local customer base or their international customers. Tesla's margin and balance sheet advantage could allow Tesla to lower vehicle prices below the production costs of its competitors. Have to jump in here. I just want to make sure that everyone got that point. I agree with this. Tesla could lower their vehicle prices, as in how much a consumer pays, to below the production costs. Not the cost that they're selling to consumers, which includes the profit, but the production costs of its competitors, squeezing their profit margins and reducing their ability to generate enough free cash flow to make the switch to EVs. Great point, completely agree. And now onto some brief comments about the energy business. Solar electricity is expected to continue to fall, with plants commissioned in 2021 expected to be 42% cheaper than projects launched just 1 year earlier in 2020. At an estimated electricity generation price of 0.039 cents, this would be just 20% of the cost of generating electricity from the cheapest fossil fuel alternative, which continues to be coal. By the way, shout out to Tony Seba. If you guys have seen my videos on this topic, you'll know what I'm talking about. There's a huge tidal wave of disruption. There's going to be trillions of dollars of stranded assets, an absolute cataclysmic collapse in terms of asset prices and values in the fossil fuel industry. It's not going to be pretty. Let's leave it there. Tesla's revenue forecast to reach $3.4 trillion in 2049. We can see here Tesla's current revenue, an absolute speck in the scheme of things. We are just getting started. Additional revenue sources that have not been considered in our financial modeling include areas like autonomous taxi services and vehicle insurance, which look to be another big revenue opportunity. So just want to reiterate once again, no robotaxi or Tesla insurance in their forecasts. Just imagine if they were included. Operating and free cash flow. Rising EV demand and a substantial first mover advantage provides a firm foundation for Tesla to accelerate annual EV production to 5.5 million vehicles in 2025, 14.85 million in 2030, and 34.1 million in 2040. Now, call me crazy, but I actually believe that these assumptions are reasonable. In fact, I think Tesla's going to be over 14.5 million vehicles per year in 2030. I have privately modeled out Tesla all the way to 2042. I don't quite have them at 34 million vehicles per year in 2040, but I'm not going to lie, I am within that vicinity in my bull case. The only major difference here, Holon assuming the global EV market massively expands, I'm assuming Tesla just continues to eat away and gain an even larger slice of the market. Different assumptions, similar conclusions. If raw material supply, particularly for battery materials, can accelerate to meet rising demand from EVs, and Tesla can execute on our production assumptions, they will generate a level of operating and free cash flow that no company has ever achieved, and few will achieve over the next 3 decades. This is a great point. Even after allowing for a 30% plus decline in vehicle prices over our model's 30-year forecasting period, we believe Tesla will grow its operating cash flow from $16 billion in 2021 to $207 billion in 2030, and $763 billion in 2040, and close to $1.42 trillion in 2050. Jumping in here again, my valuation model, again, reminder, available exclusively on Patreon for the investor support level and above. Check out the link in the description. Actually has Tesla way ahead of these assumptions. But again, I am including Robotaxi and a little bit of Tesla bot as well, which makes an enormous difference. If you think these numbers are staggering, just imagine if they include Robotaxi revenue, etc. Dividends and share buybacks. The enormous accumulation of free cash flow at Tesla from 2025 should allow Tesla to make substantial investments in other business lines outside of energy and electric vehicles. We believe that by 2025, Tesla will be in a strong financial position to reward its shareholders by beginning to pay dividends from 2025 onwards. We have assumed a constant rate of 25% of net profit each year for dividend payments. The total value of these dividend payments over the period from 2025 to 2050 is $2.65 trillion US. Not bad. Over the 30-year lifetime period of our model, we have assumed that total shareholder distributions through dividends and shareholder buybacks reaches $5 trillion US. Free cash flow. Tesla is a cash machine. With Holon's free cash flow assumptions accelerating from $9.2 billion in 2021, $177 billion in 2030, $732 billion in 2040, and hitting over $1.38 trillion in 2050. Long-term investment portfolio. By the way, guys, this is a really interesting piece of this analysis. If Tesla can successfully implement the business case outlined in our financial model, the challenge for analysts in valuing Tesla is considering how to accurately account for its immense cash balance. Simply adding it to Tesla's cash holdings on its balance sheet and earning the current cash interest rate of 0.25% is unrealistic given the extremely low return on a cash balance fed by free cash flow of $400 billion per year from 2035 and $1 trillion per year from 2044 onwards. While it is likely that Tesla will make substantial investments over the next 30 years in electric transportation and possibly other sectors, there is little information or direction from the company to its long-term investment plans. We have assumed that Tesla earns a conservative 5% return per year on its portfolio. Just in case anyone's lost here, the idea is Tesla's going to have so much fucking money, they will not know what to do with it. They'll have to invest some of it. By the way, shout out to Tesla's current Bitcoin investment, and that this investment portfolio will generate a conservative 5% annual return. Using a 5% annual investment performance, our financial model forecasts that Tesla's long-term investment portfolio will grow from $242 billion in 2030 to $3.2 trillion in 2040 and eventually hit $10.5 trillion in 2050. Tesla's massive cash reserves and investments begin to contribute meaningfully to net profits from 2035 onwards. And this is a really interesting graphic. We're looking at investment income as a percent of total net income. And by 2050, Holon have it at just over 50%. Imagine that. Tesla's investment portfolio generating over 50% of their net income in the future. This is a really interesting idea. Valuation. Stage 1, product development and launch stage, 2021 to 2030. The net present value of Holon's cash flow forecast for Tesla discounted back to today is $3,369 per share. Stage 2, acceleration stage, 2031 to 2040. The net present value of Holon's free cash flow forecast in 2031 is $6,244 per share. Stage 3, maturation stage, 2041 to 2050. The net present value of Holon's free cash flow forecast in 2041 is $9,056 per share. Stage 4, terminal growth stage. This final DCF valuation of $9,437 per share is highly sensitive to the terminal growth rate used, with a 1% shift adjusting our 2050 DCF price valuation by 12.8%. So we can see here, 2021 Tesla stock $3,369 per share, 2030 $6,244, 2040 $9,056, and 2050, assuming that Tesla's not really growing much anymore, $9,437 per share. Oh yeah, and by the way, once again a reminder, not including any Robotaxi revenue, not including Tesla bot, blah 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 blah. Our conclusion on Tesla. Our current DCF valuation for Tesla of $3,369 per share offers substantial upside for patient investors over the long term. Holon believes Tesla offers an investment return that will be matched by only a handful of companies over the next few decades. I agree. Holon has come to the conclusion that Tesla's massive first mover advantage, 7+ years, coupled with an accelerating demand shift from ICE vehicles to EVs, uniquely positions Tesla to dominate the industry. Holon believes few other companies globally present as strong a long-term investment opportunity as Tesla, confirming that it should be a core position in every investor's portfolio over the next 30 years. Absolutely agree. Replacing ICE vehicles with EVs over the next 3 decades will see the global EV fleet reach 1.98 billion vehicles by 2050. Tesla's first mover advantage and strong balance sheet should allow Tesla's fleet to surpass 462 million vehicles in 2050. Tesla to be the first automaker to release full self-driving level 4 autonomy, likely before 2025. Just for the record, my valuation model, again, check it out on Patreon, link in description, has Tesla's very first robotaxis, and not very many of them, beginning operation in 2024. Once again, it seems that Holon and I are very close in terms of our assumptions. Tesla's integrated energy systems, which includes solar panels and solar tiles, and its battery storage solution, provide a 70,000 Australian dollars, for those that don't know, Holon, an Australian firm, of savings, net present value, over 25 years in Australia, including fuel savings achieved by switching from an ICE vehicle to EV. These savings can be used to fund the purchase of a Tesla Model 3 vehicle today, and also fund an additional Model 2 $25,000 Tesla in 2034 once the first vehicle reaches its 12-year expected operating life. No other automaker can compete with Tesla's integrated energy/transport offering. This is a really great point. People who do the numbers, they realize Tesla solar plus battery equals I'm saving a lot of money over time, equals I have more free cash to buy things. Maybe I'll use the money that I've saved to buy a Tesla or two. The greatest risk to slower EV demand globally is price disruption that will likely occur over the 2020s if the key battery materials of lithium, nickel, graphite, and cobalt cannot meet expected demand. This is a fair point. Tesla has a manufacturing advantage over other manufacturers and has higher profit margins than traditional ICE automakers off a much smaller production base. Again, very important point. The more Tesla scales, the more profit they'll be making per vehicle. This is a feedback loop, it's a flywheel, and it's massively underappreciated. Holon reiterating that they believe Tesla will capture 20 to 22% of the global EV market over the next 3 decades. Holon believes most of the current ICE makers will not be successful in switching to EVs, aka they're all unequivocally f***ed. And I agree. Tesla is in pole position to exert maximum pressure on traditional automakers over the next decade. Finally, Tesla's free cash flow accumulation from 2025 onward will allow them to begin paying dividends by 2025 and begin buying back its own shares from 2035 onwards. Again, we've assumed 25% of net profit allocated to each. And there we have it. Let me know in the comments below, what do you guys and girls think about this analysis, the research? Do you think the global vehicle market can expand this dramatically? Can Tesla maintain about a 1/4 share of the market? What would these price targets look like if Holon were also including robotaxi revenue, Tesla bot, etc., Dojo as a service? I could keep going on and on and on. And did anyone else find it a nice change of pace to see research that extends for multiple decades? As most of you watching will know, I'm a very long-term, multi-decade investor, so this was really nice to see. And finally, once again, go sign up to Patreon, check out the card in the corner or the link in the description. Everyone gets access to my up-to-date Tesla stock price targets out to 2031, see where I'm at. Holon and I seem to be on the same page on a lot of assumptions. If you want to go a step further, you can sign up to Patreon at the investor tier and above, and you'll also get access to my Tesla valuation model, every sell, every assumption, every figure I'm working with. Check out the link in the description. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. And don't forget the BlockFi Bitcoin Rewards credit card, where you can earn 1.5% Bitcoin back on every purchase. There's a link in the description. You can also earn up to $250 in crypto bonuses when funding a new account on BlockFi, also linked below. And finally, don't forget your free stocks with WeBull and Stake, also linked in the description. These great offers also help out the channel. Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.